Hi, everybody. March 6th, the market update desk with Scott Riley, NMLS number 157524. Got a few things going on today. It's a little bit of a slower day data wise. Getting ready for tomorrow's all important BLS jobs report. Stocks have started the day down. Looks like Dow is down about a little over 400. S&P down about 80, and mortgage bonds are up. I'm sorry, mortgage bonds are down and mortgage-backed securities are up, unfortunately. So the big news today was the Challenger jobs cut report. Now that counts corporate layoffs based on mass layoff data from the Department of Labor. That showed that there were, it's a big number here, folks, 170,017 layoffs in February. That's up over 49,000 from the previous month. This is the largest number of cuts since July of 20. We all know what happened in 20. And the largest February total since 2009. This is a huge number. So there's a lot that's going to play out over the next few months here. Initial jobless claims were reported at 221,000. That represents a decrease of about 21,000 from the previous week. And continuing claims came in at 1.897 million. That's from the previous week's revised number of 1.855. So about 20,000 up there. Now, also came out yesterday was the Fed's beige book. Showed pretty much a weakness in the economy from this report. Consumer spending is lower. Motor vehicle sales slightly lower. There's a decline in construction activity, and employment only nudged up slightly from the previous month. And GDP, for next year looks like, it's kind of all over the board, but it's somewhere in about a 1.5% range, which is obviously very slow. Now, 10-year bond today is sitting at 4.2937 as I'm looking at the screen here right now. We've crept up from the lows that we had a couple of days ago. The 10-year got down to about 4.16, so we're up about 10 from the bottom, which bounced off the 200-day moving average, which is not too big of a surprise. Tomorrow's going to be a big day. We'll stay on top of it for everybody. We've had a flurry of activity with a bunch of people accessing these lower rates on refinancing. Just had a customer that they're going to consolidate some debt and save over $1,500 a month. And the reason for that is, they had a lower interest rate on their current mortgage, but their rates on everything else, including home equity, were significantly higher. So their new weighted average or blended interest rate is incredibly lower than what they have right now, creating all the savings. They're going to drive that savings into paying down the mortgage faster than what they were before and be out of debt years before what they would have otherwise. Give us a call. We'll break down all the data, try to help you out. 616-293-2189. Have a great afternoon.